Hey everyone, welcome back. Today we're going to be strapping in for a deep dive into India's GDP performance. It's a topic that's super crucial for anyone getting ready for the UPSC, especially the mains exam. It's kind of like the economic version of a roller coaster, right? With all the twists and turns and even those crazy loop-the-loops. But before we really get into all those ups and downs, let's just make sure we're all on the same page here. GDP, that's gross domestic product, right? It's basically the report card for a country's economy, showing us just how much it's actually producing. And for all of you aiming for those top ranks, understanding GDP is, well, it's basically non-negotiable, whether you're prepping for prelims or mains. Now, we're going to be focusing on real GDP today, which, it takes inflation out of the equation to give it the most accurate view of actual growth. Think of it like the economy's, like its fitness tracker. Our main source for this deep dive is a recent article from the Indian Express. So, if you want to check it out later, you can find all the details in the show notes.
Absolutely. It's like taking off all the makeup to see what's really going on underneath. And speaking of revealing the true picture, the latest data, well, it tells quite a story.
Okay, so spill the tea. What's got you so intrigued?
Well, the second quarter of FY25, so that's July to September, it saw a sharper slowdown than a lot of people were expecting. Growth dipped to 5.4%, which is it's a significant drop compared to the previous quarters. It's definitely got economists and policymakers, well, raising their eyebrows.
5.4% doesn't sound too terrible at first glance, but I guess it's all relative, huh? For someone like me who's, more into history than economics, how big of a deal is this slowdown really?
It's like this, imagine a runner who's been clocking some seriously impressive lap times, and then all of a sudden their pace just drops. Now, that doesn't mean they've stopped running altogether, but it does make you wonder, right? Is this just a temporary blip, or is there something more fundamental going on here? This is where, really understanding the nuances of GDP becomes super important, especially for the UPSC mains exam.
So how do we even get these GDP numbers in the first place? It can't be as simple as, like, someone just adding up all the receipts in India.
Right. You're right. It's definitely not that simple. It's actually it's a pretty fascinating process. In India, we use the system of advance estimates to try and project GDP growth even before we have all the final data. There are actually 5 rounds of these estimates, starting with what we call the first advance estimates, or FAE.
5 rounds? That sounds like a whole lot of guesswork.
Well, it's not exactly just guesswork. It's more like I guess you could say it's like refining a sculpture. Each round, we get more data, which leads to more accurate estimates. So we go from the FAE, which is based on just the first 2 quarters of data, to the second advance estimates, then the provisional estimates, first revised estimates, and finally, we get to the final estimate.
Okay, so they keep tweaking the numbers as more information comes in. But why is this whole revision process so important? Especially for, someone trying to understand the economy, let alone ace an exam like the UPSC.
It's crucial because these revisions, especially when they're large, they really raise questions about how reliable those initial estimates really are. Like, take the recent upward revision for FY24 GDP, which went from 8.2% to a whopping 9.2%. A change that big can really impact policy decisions, investor confidence, even our understanding of where the economy's headed overall. And for our UPSC aspirants out there, this highlights a really key area. You got to analyze these revisions and what they mean. It's crucial for answering those tricky data interpretation and policy analysis questions.
That's a fantastic point. So let's dig into the specifics of this latest MoSPI release. What were the key numbers they gave us?
They released the GDP growth for the third quarter, revised estimates for the past 2 financial years, and they also gave us a forecast for the full year. The third quarter actually showed a pretty respectable growth of 6.2%, which is a positive sign after that Q2 slowdown we were talking about.
Okay, so a bit of a rebound in Q3, but things are still looking, a bit shaky overall. It's almost like the roller coaster is trying to climb back up, but it's facing some serious resistance.
That's a great way to put it. And, this really highlights another crucial thing about understanding GDP for the UPSC. It's not just about that headline number. It's about, really digging deeper into the components of GDP, figuring out what's actually driving those trends.
So what's under the hood of this economic engine, so to speak? I remember from my, very limited economics knowledge that consumer spending is a big chunk of it, right?
Absolutely. Private consumption, it's a major engine of growth. When people feel good about the economy, they spend more, which then fuels businesses, creates jobs, and just, boosts that overall economic activity.
But it can't just be about what we're buying.
Right.
What other forces are at play here?
Right. Think of it like a three-legged stool. You've got private consumption, like we talked about,
Yep.
but then you've also got government spending and investment. They all need to be in balance to keep the economy stable.
Okay, so government spending. That's stuff like infrastructure projects, social programs, things like that.
Exactly. It's the government's job to invest in things that, benefit the whole economy, especially when things are slowing down. Building roads and bridges, schools, investing in healthcare and education, all of that creates jobs, stimulates demand, and just lays the groundwork for future growth.
So it's like the government can kind of give the economy a push when it needs it. But I imagine there's a delicate balance there, right? Too much spending and things to get out of control.
You're totally right. Overspending can lead to inflation, debt, which can, well, create even more problems down the line. It's about finding that sweet spot, being strategic with spending to get the biggest impact. And that balancing act, figuring out just the right level of government intervention. Well, it's a big debate in economics, and it's one you'll probably come across in the UPSC exam, too.
All right, so we've got consumer spending, government spending. What about that third leg of the stool, investment?
Investment, that's really the key to long-term sustainable growth. Think of it like planting seeds for the future. When businesses invest in things like new factories, equipment, research, technology, it expands their ability to make goods and services, improves their productivity, and creates better-paying jobs.
So it's not just about, keeping things running today. It's about investing in a bigger, better economy for tomorrow. But what really influences these investment decisions, it can't just be businesses snapping their fingers and deciding to build a new factory, right?
Of course not. It's a whole mix of different factors. Business confidence is huge. If businesses feel good about the future, they're more likely to invest. Then you've got things like interest rates, government policies, even what's happening in the global economy. For example, if interest rates are high, borrowing money gets more expensive, and businesses might think twice about investing.
Sounds like a giant puzzle where all the pieces are connected. And for our UPSC folks, being able to analyze those connections and understand how they affect the economy, that's super important.
Exactly. And going back to this latest data, one of the most interesting things is that private consumption got a huge upward revision for FY24. It was initially estimated at 4% growth, but now they've bumped it up to 5.6%.
Wow, that's a pretty big jump. What do you think explains that underestimation in the initial projection?
Well, it suggests that consumer spending was stronger than they thought it would be. There could be a few different things going on, maybe some pent-up demand after the pandemic, increased government spending that, trickled down to consumers, or even just changes in how people are spending their money. This is where things get really interesting, trying to break down the data and see what's driving those trends. And for someone prepping for the UPSC, developing that analytical skill, that's pure gold.
Okay, so we've got this revised picture of stronger consumer spending, but we're still looking at a projected slowdown for FY25. So what does all of this mean for India's economic future? What strategies can India use to navigate these uncertain waters and get back on that fast track to growth?
That's the million-dollar question. And it's one that policymakers are wrestling with right now. There are a few different schools of thought on this, each with its own pros and cons.
All right, so we've gone through all those GDP numbers. We've kind of broken down the key parts of economic growth. And now I guess it's time for the big question. What's next? What can India actually do to, kickstart growth and keep that momentum going?
Well, there's no magic solution, but there are definitely a few paths India could take. One way is to, really focus on boosting domestic demand, especially private consumption, which we know is so important for growth.
So how do we actually encourage people to, spend a bit more? Is it as easy as, I don't know, just giving everyone some extra cash?
Not quite. It's more about setting the stage for spending to really take off. Think about tax cuts that leave more money in people's pockets, especially for the middle class, or policies that help create more jobs and, lead to higher wages. And of course, making sure those social safety nets are strong. That gives people a sense of security, makes them more comfortable spending. It's all about making people feel confident about the future.
That makes sense. But what about bringing in money from outside? I've heard a lot about, how important foreign investment is for a country's economy.
You're absolutely right. Attracting foreign investment is huge. India has so much to offer global investors, a big and growing market, a young and increasingly skilled workforce, and a really vibrant entrepreneurial scene. But like we said before, when the GDP numbers look a little shaky, investors can get, a little hesitant.
So how do we convince them that, India is a good bet, even with these economic bumps in the road?
It's all about showing them that India is serious about creating a stable and predictable business environment. That means cutting through all that red tape, simplifying regulations, and making sure policies are consistent and transparent. India's already made progress on that front. But, there's always room to do more. It's about sending a clear message. India's open for business and ready to welcome foreign investment.
Okay, so we've got boosting domestic demand, we've got attracting foreign capital. Any other key ingredients in this recipe for economic success?
Infrastructure is always a big one. Think of it like, laying the foundation for a strong economy, investing in better roads, ports, airports, and of course, digital infrastructure. All of that makes it easier for businesses to operate. It cuts down on transportation costs and opens up all sorts of new opportunities. It's about creating a more connected and efficient India, which in turn attracts investment and boosts economic activity.
So it's not just about, building shiny new things. It's about making smart investments in projects that will actually make a difference, that will really improve the economy's performance.
Exactly. And we can't forget about the power of innovation and technology. India's got this thriving tech sector with so many talented engineers and entrepreneurs supporting that ecosystem, helping startups and really encouraging research and development. That can lead to brand new industries, high quality jobs, and long-term economic growth.
So it's about looking beyond those traditional sectors and embracing all the potential of, the digital age. Seems like there's a lot India can do, not only to get through this slowdown, but to come out even stronger on the other side. And for all of you UPSC folks out there, understanding these strategies, how they might work, and the challenges they face, that's really important for those tough essay and analysis questions.
Couldn't have said it better myself. It's about seeing the economy as this complex system, right? With all these different levers you can adjust to try and influence its path. The key is to be strategic, use data to make decisions, and be adaptable, always learning from what happened in the past and looking ahead to the future.
This deep dive has been quite a journey. We started by trying to figure out all those sometimes confusing GDP numbers. Then we dug into what really drives economic growth. And we even mapped out some possible routes for India's economic future. It's amazing how much we've covered. But before we wrap things up, I want to turn it back to our listener.
Absolutely. We've shared the expert opinions. We've looked at the data. But now, what do you think?
Exactly. As India's economy, keeps riding this roller coaster, what strategies do you think are the most promising? What are you curious about? Head down to the comment section and let us know. We really want to hear your perspective.
And don't forget to like and subscribe to the channel. For more deep dives like this one, we'll be back soon with another topic, one that's sure to be helpful for your UPSC journey. Until then, keep learning, keep exploring, and keep those brains buzzing.